What's up, guys? Welcome back to the channel. This is Jason, certified financial planner and host of Fighting Words Financial. I hope you guys are all having a nice holiday weekend. I wanted to make this video beforehand. I wanted to talk about Square and how I think Square is going to destroy banks by being just like that creepy work friend your girlfriend has. They're going to weasel their way into your lives if you're a business owner, whether you like it or not. In this video, we're going to talk about Square Inc. and why some analysts think that this company is just getting started reshaping the financial industry and could already be on its way to disrupting the relationship you have with your bank, especially if you're a small business owner. I think that it's going to be a major disruptor as well, and I can see exactly how they're going to do it. How does this relate to that creepy work friend your girl just insists is a nice guy and only wants to be friends? We'll get to that in just a bit. Once again, folks, like some of my other videos talking about individual companies, there is a lot that I can't cover in a single YouTube video, so I'm not going to be talking about every aspect of Square's business model, but please feel free to point out things that you think I may have missed, and maybe I'll cover those in a follow-up video. My daughter reminded me once again that I never ask you guys to subscribe in my videos, so if you find value in what I do, please hit the like button and subscribe. So, if you don't know who Cathie Wood is, the CEO of Ark Invest, you probably should. She has absolutely brilliant insights on different types of new technologies and how they're going to impact the way we live and the way we invest in the future. Now, while I don't normally invest in any active mutual funds or ETFs, I do in the case of some very specialized sectors that I want to be overweight in, and I accept the added risk of both concentration and investment management risk. Which, let me be clear, investment management is a risk, not a feature of any portfolio. It has a cost, and managers are not likely to outperform their tracking index over time. But in the case of my desire to be invested, really overweight in disruptive technologies, a managed fund makes some sense, as I already have some concentrated bets on individual stocks in that subsector, and I don't really have the capital or frankly the knowledge to create further diversification, or at least the diversification within the subsector that I would like to have. So what I'm saying is that I'm not entirely unbiased when it comes to my respect for Cathie Wood. I do hold shares in some of Ark Invest's ETFs. It's also important to note that there's simply no disruptive technology index or index fund for me to invest in, so I'm really left with no choice but to look for an actively managed ETF if I want to be overweight in certain technologies and still maintain a healthy degree of diversification. Another reason is that there are simply many technologies and many trends that I have not gotten around to researching and don't adequately understand. But as I start researching these companies and technologies, I'll share what I've learned with you guys, and I encourage you to do the same in the comments below. I probably learn just as much from you guys as you do from me when I make my videos, and you guys are the inspiration for all of my videos. Cathie Wood focuses her investment firm Ark Invest on disruptive technologies across a number of different themes, one of those being financial technologies, or fintech for short. Fintech innovations include mobile payments, digital wallets, peer-to-peer lending, blockchain technology, and very importantly, financial risk transformations. Let's be clear about something right now. We are right smack dab in the middle of a transformative revolution in fintech as we speak. If you're paying attention, you're going to realize that it's also an artificial intelligence-driven revolution. Everything is changing very rapidly and in ways that will greatly benefit small business owners and freelancers. I think that the panic of 2020 has only hastened this trend and made changes that were going to happen to our economy anyway come a little bit earlier. Cathie Wood has recently done a few interviews talking about the disruptive potential of Square and how she believes that Square will come to dominate merchant-level transactions, particularly for mom-and-pop type operations. She brings up a lot of good points in her interviews. She thinks that Square and the Square Cash App are going to destroy banks and turn them into some sort of commoditized utilities with their roles in finance greatly reduced. Her description got me thinking about the creepy work friend and how Square might accomplish this. So what does Square do exactly? Well, at first glance, from the business owner's perspective, they look like they offer a very simple service. They have point-of-sale hardware and software that gives business owners the ability to read cards and accept payments. The card readers aren't very expensive, and there's a per transaction fee, and there's no monthly fee associated with your contract with Square. The per transaction fee is a little bit more expensive than other companies, but the upshot here is that you don't have to sign any sort of long-term contracts. It seems simple, right? And it doesn't seem very special, like they would have some sort of great competitive advantage. But Here's where Square starts to resemble that creepy male work friend that your girlfriend insists is just a friend. It's all about the data that Square is collecting. Just like every conversation your girlfriend has with that creepy guy at her job, every interaction you have with Square is being strip mined for all of its useful data so it can be used to deepen your relationship with Square at a later date. When small business owners first start to use Square, it's likely that they started to use Square simply for its payment processing. Sooner or later, though, some of these businesses, like all relationships, are going to go through some headaches, except that unlike a relationship in a business, the headaches are usually associated with success, and these businesses are going to need some guidance. And just like that creepy work friend that sees some of your relationship challenges as an opportunity to deepen his friendship with your girl, Square sees it as an opportunity to insert itself between you and your bank. Square knows that, like a bad boyfriend, your bank isn't anticipating your needs. I'm not saying this because I hate big banks. The place you have your bank account simply can't anticipate your needs because they aren't collecting the data, nor do they have the technology to do so. Now, I've owned several small businesses and gone through the process of setting up merchant services several times. Because of the structure of traditional merchant services, your bank isn't seeing a large part of real-time transaction data. It might be seeing it once a month, or in some cases even once a quarter. According to Cathie Wood, Square sees that data in real time. It can see the cadence of your business, when it's going well and when it's not, and when your business might be ready for additional services that Square can offer. Now let's talk in a real high-level way, not a granular look by any means, about a few ways that Square can use the data to anticipate business services that you're probably going to need to grow your business. I've had a bunch of credit card terminals in my day, but I've never had one that is useful for accounting in the way that Square's products are. What's being underestimated by the competitors of Square, namely the banks, and by a lot of investors out there, is the real potential of Square's artificial intelligence to analyze the data being collected through transactions so that Square can understand the needs of a business and create calls to action based on the real-time needs of business owners. If we take a look at what Square defines as their ecosystem, we can see that their entire business model is based on creep. You first sign up for payment and point of sale, and Square makes it easy with low barriers to entry and no monthly fees. It's completely unthreatening, like that creepy dude at work. As your business grows and you add new team members, add new complication to your business, Square makes managing employee workflow a lot simpler. The Square point of sale comes with PIN permissions, staff accounts, and reporting to aid employee management. Square's business reporting allows you some insights into staff sales and helps you to understand your individual employees' performance. As your staff grows larger, your activity increases, Square's AI is going to anticipate when you're going to need payroll services, which are offered through Square Financial Services for an additional fee. Whether your business is just getting started or looking to break into the next level, Square can help you to create, send, and track email campaigns in mere minutes through the Square Marketing Services dashboard. Customer email addresses are added at checkout every time someone checks out, helping you build out those marketing lists. Square isn't just limiting its reach to business owners, though. The Square Cash app is a peer-to-peer payment service with other features that turn employees of some businesses into Square customers as well. The Cash app directly supports direct payroll deposit through your bank. It even has an arrangement offered through a third-party bank to provide a routing number and a new account number to Cash App users who might have been previously unbanked. I'm not going to go into all the details about the Square Cash app. I'm going to reserve that for another video. But Square keeps adding more and more functionality to the Cash app, and it looks like there's going to be a lot more opportunity for the app. So in 2018, the Cash app added the ability to invest in stocks or saving product right through your phone. Users already store more than $400 million in the Cash app, and trading revenue for both stocks and Bitcoins has only increased since they were introduced. It's not an insignificant part of their overall business either. The company's Bitcoin revenue alone was $875 million last year. Its gross profit associated with the Bitcoin business was $17 million. Those numbers are up 600% year over year and 711% year over year respectively. So all that's great, right? And there are actually a lot more services that Square offers that I won't have time to discuss in this video. But we have to talk about the most important part of Square's plans for the future and what makes them a threat to traditional banking. I am, of course, talking about Square Capital, the lending arm of Square's enterprise. Now let's return to the creepy work friend analogy for a second. Square, like that creepy friend, really does its homework on both business owners that use its merchant services and users of the Cash app, collecting and analyzing all of the data in ways that banks just aren't set up to do. Square is getting a more complete picture of its users' finances, and as mentioned, it will use that information for personalized lending decisions and for targeted advertisements. Like that creepy work buddy your girl has, Square is able to anticipate the needs of a business, but because it knows what your revenues look like, how much you're making, and can predict when you might need a loan, whether it's to purchase inventory, open a new location, launch a new product, or buy equipment. This is becoming a major part of their business. Over the last 2 years, over $1 billion has been extended to more than 100,000 sellers through Square Capital, giving them quick access to funding to meet their business needs. Access is quick because Square already knows you need a loan, already has the majority of data they need to approve their loan for you, and can cut a lot of the expenses associated with underwriting out and make the loans faster and in a more efficient manner. The way that Square structures its loans is also amazing. You get a customized offer based on your card sales through Square, and you choose your loan size. There's no ongoing interest charge. There's only a simple flat fee. How the hell does this work? That doesn't sound right. How can they do this, you might be asking yourself. It's really quite amazing and quite simple, and I can't believe that no one thought of this sooner. Or maybe somebody did, and as Cathie Wood put it, the time just wasn't right for this idea to bloom. Business owners repay the loan automatically with a percentage of their daily card sales through Square. There's no monthly payments that you have to make. So Square already knows approximately how long it's going to take to repay the loan before they ever issue it. You don't see any ongoing interest charge because it's prefigured into the loan and based on financial risk analytics that are well known to Square's AI. Before you actually receive the loan, you get an email that directs you to a website, and by using slider bars, you select the loan amount and you know right away what your repayment terms are going to be like. There's no application fees, there's no closing costs, and there's no impact to your credit score when you apply because Square already has all the data it needs to make a decision regarding your loan. You repay the loan daily through your credit card transactions. Less on slow days, and a little bit more when sales are strong. It's simple and it's brilliant. Okay guys, those are just a few reasons why I think that Square is going to be a large part of the fintech revolution we already find ourselves in. I think it's mostly about data analytics through AI and improving the efficiency of small business lending. I hope you guys found value in today's video. Let me know in the comments below, and I'll see you guys next time.